All right, we have a question from Mr. Lovely Prashant. Prashant, go for it.
Hi Nick. Quick question. Basically, I was. Can you please open the weekly chart of CAD JPY? I was really itching to take that trade when CAD JPY bounced, but as you were means you did not take that trade, so that's why I did not go for it. No. If you zoom out a bit, the zone is little below that. Yeah, yeah, that one.
I remember,
Yeah.
yeah, I remember looking at this one. Okay, so
So, what I wanted to know, is there anything wrong with that, or my analysis is wrong?
okay, well, is there anything wrong with it? Right and wrong just comes from our subjective opinions, right? So I'll give it to you based on what my subjective is, while also denoting that there's technically no right or wrong in trading because it's all subjective.
Okay.
So for me
Yeah.
personally, I saw this. However, I thought there were other trading opportunities that were better available over the course of the past week or so. And also, what I was mainly looking at for this right here, it's not that this isn't a zone, right? There was a previous high where it bounced and then it came back into here. I probably would have waited for it to come a little bit deeper, maybe to like somewhere right here where all those little wicks were. So it might have
Okay.
barely, yeah, it might have barely got into there. But what I was really looking for is I was looking at these previous lows right here. And then whenever I saw this coming in here, this was like a couple days ago. Yeah, it was earlier this week. That's right. I saw these fucking candles just cascading down here into the zone. And then whenever I saw this one, the candle was open and it was down there. It hadn't closed yet. Um, Whenever I see stuff like that, where it's just falling into the zone, like a freight train or like a Mack truck or like a lorry, for those of you in Aussie land or UK, whenever it's just cascading into a zone, I'm generally a little bit less likely to trade it. But this is the zone I was looking at because it was more relevant and more recent. We had two little resistance bounces right there, break above. Some might call that a little bounce as support. I don't know. But these two for sure, right? A little nice bounce here, but nice bounce here. So I was kind of waiting for that, thinking we might have kind of like a little, just a nice little reactive bounce there. After I saw this candle break below the zone, even though it closed above the zone, sometimes that just turns into a break and retest. So, for example, it might come down here. It looks like it even tried to. It comes into the zone, then it will retest and then bounce away, even though the candle closes with a wick on the higher time frames. So, when there's multiple things like that that kind of make it a little bit more complicated and a little bit more of a pain in the ass, you're like, okay, we could be bouncing there or breaking there, and then we could be bouncing here or breaking here, and there's nothing technically wrong with it. I just thought it wasn't as clear as other opportunities, right? Because with this, all the explanations I gave to you about the little nuances and stuff, what's way easier, man, is just finding a trade like this where it just comes into a region and it's just like pretty plain and simple, right? You're like, you and me and most people would probably agree, save for that little high breaking past that zone. This is probably a pretty clear zone. I just kind of wait for stuff, generally speaking, that's really, really clear. And so I guess to me, I guess the CAD JPY said, I just guess this probably wasn't clear enough for me. So that's why. Does that
Got
answer
it.
your question?
Yes. Thank you. That's all I have. Thanks.
Sweet, man. Are you sure? Because Prashant, you have some of the best questions here on the live session. So like, I'm all ears.
No, for today, I think that's the only thing I have because I have done my analysis, etc. And that's the only conflict that I found that I was really itching to take at least a quarter of the trade when I saw that it started bouncing from that.
Cool.
Thanks.
Well, dude, I'm gonna have to start asking you questions now because you've been here for a few months. You've asked a ton of questions, and now you're getting to the point where like you just don't have any more questions. Like you're profitable, you understand everything, and I'm like, yo, Prashant, please, just one question this time. And you're like,
Sure,
Nick,
sure.
I don't have any questions for you, Nick. I'm doing good in trading.
See, I have improved my trade management. I improved my psychology on holding, specifically holding the trade while it is in the drawdown. And initially, when I joined, I know that we can have the winning streak and losing streak. Losing streaks are the most difficult ones. But then I saw the drawdown, sorry, the sideways streak as well, where losing, winning, losing, winning, and the account just stays sideways, etc. That is also a frustrating one. But uh, at least it is better psychologically compared to the losing streak. So my psychology is improving. I think few more months and I'll be much better trader compared to the one I was previously few months back.
At this rate, a few months from now, you're gonna be a better trader than me. I'm gonna have to subscribe to your group. I'm gonna have to force you to create
No,
a group,
dude.
and I'm gonna have to follow your trades, and I'll just take your trades and post them in MissionFX. I'm like, Prashant knows what he's doing. He's done this shit for a while. He's got it. I'll just copy
No,
what
dude, you are the master.
he
Shenshei.
Shin Shin, Master Jedi.
And then you can retire, Nick. Finally,
I'll retire. Yeah,
just follow, just follow Prashant's trades instead.
Erasmus, you're doing good too, bro. Like some of the shit you send me and some of your results, like you're really coming along as well. I might have to like have you both do a partnership and create a group, and then I'll just automatically take y'all's trades and forward it to the next trades group, and I'll just go hiking in Aspen every day.
Exactly. That's
Good
a good
shit.
idea.
Thank you again, Prashant, for the questions. Erasmus, dude, okay, you have come quite a ways, and you used to have like some questions, and you used to kind of like
Yeah, I have a question today as well,
perfect.
just to to have something to ask.
Mhm.
I sent it in the Discord.
Okay, let me go to Discord. Rasmus. Euro Canadian dollar. Yeah, this one looks okay. Yeah, it's on the daily chart. I had it
So
right.
it was kind of bouncing before the alert, so I didn't take this trade, or I wouldn't take any trades other than yours anyway. But I was just wondering if it comes up to the zone now, do you think the move already have happened, or would you still consider that a trade?
I still consider it like valid. Yeah. Yeah, just as long as it doesn't like the only time I wouldn't consider like a trade worth taking is if you start seeing it do stuff like this, right? So you've got the cute little zone drawn here. This is the daily, right? If we go to the weekly, it's the same thing. It's just an area where price is bouncing. It gets kind of hairy if you go back in there, but you know, we don't have to use that price action. We could just use like this right here for the next zone. We'll call that a little bit of leakage. And so we'll say these are just two separate zones. So we've got this one right here. And then we've got the next area. If it breaks, maybe it'll go to here and we can just take another sell. No big deal. So with this right here, it came into the zone and bounced. I like what you did because you were waiting for the lowest risk entry, which is like right up around these highs. You don't have to, right? Of course, like I say, that at least it just minimum needs to go halfway into the zone. In this case, at least for the way I've drawn it right here, yeah, it went about literally exactly halfway to the zone, and then it just immediately turned around. I'm not even quite sure you would have been able to have got a reasonable entry because by the time it started to bounce, right, it still would have been in the zone, but it's a little bit lower, went sideways, and by the time it starts taking off, right, the trade's already kind of run away. I would have likely waited for what you were waiting for, which was to set an alert around, you know, close to these highs right here, and then just wait for it to get there.
Yeah, that's what I see you do all the time, and it's very tempting when it started to come up to the to the alert. It's like, ah, should I just do something? But I also understand that you have potential to go into drawdown on and potential to lose even more. And also, it's further away from the profit targets than if it's going into drawdown and then have to go all the way to profit target. So
100%. I know the mental battle, dude. I experience it every fucking day. I'm here. I'm calling my trades in the little Knicks trades group, and then like I'm like, you know, man, it's been like 4 days since I've called a trade. Like, you know, people are gonna be wondering, like, Nick, hey, when's the next trade, bro? I've been here a week and we haven't had any trades. What's going on? And I'm like, it's gonna come. Don't worry about it. It'll be fine. We're gonna have a trade. But it's like, you know, and I'm waiting because I know that like if I just enter when it's like really low in the zone or in some cases even midway through the zone, which again is still perfectly fine to enter a trade when it's halfway into the zone. That's kind of like the bare minimum you want. There will be times where I'm really just waiting for the most extreme entry because if it doesn't happen and it goes away, kind of like we saw here in this example, right? If it doesn't happen, it gets into the zone, bounces away, and you're like, you know, looking at it in hindsight, it really came up into the zone, right? It had this 3 touches here. This last time it came into the zone, bounced away. Why didn't I enter? And you'll just cry about it and then life goes on. But you didn't lose any money, right? You missed out on the opportunity to make money, but you didn't lose any money in your principal on your account. But for the trades where it just goes deep into the zone, the risk is just so much better structured. And I'll show you why. Okay, so the point of me sharing this exercise is because for those of you listening to this call and those of you watching the recording, Erasmus has learned something very interesting about trading. It's like you get paid mainly for the amount of time that you're waiting before a trade occurs, and the actual time that you're entering a trade and waiting for it to play out, that's not where a lot of the profit is made. A lot of the profit is made by just waiting for price to get to a really optimal area that has a good risk structure. And then if it goes against you a little bit, you can get out quickly at a small loss. But if it starts going into profit, it generally happens pretty quickly. Like for a lot of our trades, even though it's weekly or daily time frame based, they only play. It takes a few days to play out in most cases, sometimes a week or two. But Rasmus has learned like you just need to be waiting for the point to enter because that is where all the risk structure comes in. That's where the position sizing comes in. That's where the pre-planning of the trade and the management decisions come in. And by just waiting for that, you save yourself so much pain in the ass. And what I'm doing right now is I'm illustrating that with examples here. So imagine you enter down here after price bounces away from the zone and it goes, and then you put your stop above the zone. You have your profit target down here at 1-to-1 risk reward ratio. There's nothing wrong with this at all. Nothing at all. However, let's do an example here. Let's say instead of entering right here, and I'll zoom in, that way everybody can see. Instead of entering right there where we entered, what if we waited for it to go up deeper into the zone and then we entered up here? Okay, well, if we enter up here, here's what happens. We enter there with the same exact stop loss, the same exact location, right? If we drag our profit target to 1-to-1, all we're targeting is just this little move right here. And this little tug away from the zone, right? This little, where it basically just takes a couple days to play out. In some cases, like 2 days, like the last time it was here. In this case, it took 1 day. But this little tiny move right here, there is huge profit potential in that small, relatively predictable move. You don't have to be a hero. You don't have to catch the next 1,000 pips. In this case, it's only a 70 pip move, which for daily and weekly chart analysis is a pretty small move, right? And this, you can make so much profit in these little moves. You guys have seen some of the trades I've made, 50K to 100K, and in some cases over $100,000 on a single trade. And it's all just on these little moves. Now, you can't do that if you're entering like too early into the zone or too low into the zone if it's resistance. And if it's support, right, it's vice versa. It's opposite. You know, price bounced there deep into the zone before, but it comes up here and you enter as soon as it gets in the zone. Well, from the moment you're entering to where your stop has to be, your stop has to be all the way down here below the zone, right? You're entering up here. It's so much more optimal if you just wait to see if price can go a little deeper into the zone, and then you enter at that lowest risk entry. Because now you know the moment it starts breaking past that zone, you can just exit right there. And if your stop was down here, you lost maybe, you know, half of what the stop loss was. So this is an absolutely beautiful way to manage it. And the same principle applies here. You enter here, the trade duration is longer, the drawdown potential is larger. Even if it goes and breaks up past here and goes above the zone, by the time you'd be getting out early, in this case, it might be 75% of the way to the stop loss instead of half. If you fuck up this entry right here and this one starts going into profit, the moment it breaks above the zone, you can close. And that's about halfway to the stop loss right there. So that would mean that you take half of whatever the loss is. So if you're risking, you know, $1,000, €1,000, 1,000 quid, you know, you lose like 500 instead. The risk structure is so much better. And if it goes into drawdown, you'll generally know pretty quick. You don't have to sit in the fucking trade for like 2-3 weeks. It's usually a couple of days before it gets moving in most cases. Sometimes it takes longer, of course, but it can break above the zone, you get out, or it starts moving into profit and then you get your profit target hit really quickly. Again, even on the daily and weekly charts, this move here, that was 2 daily candles. And if you're risking a high dollar amount on this, the profit potential is ridiculous. This move here, which would have gone to that profit target if you'd sold up here, that one candle took 1 daily candle. Even the previous time it did it, right? It took 2 or 3 daily candles. It doesn't take long. It is a win-win-win whenever you simply just wait for an optimal entry. It doesn't mean that waiting for those entries means it's more likely to bounce, but what it does mean is it gives you a better risk structure. It gives you a trade duration that's way shorter, so you pay lower fees, lower swaps and stuff. You have less pain in the ass mentally because you're not sitting in a trade for 2 or 3 weeks and tying up your capital that you could be allocating that margin to other trades that are higher quality. And whenever you do have a profitable trade, it is so much quicker and so much easier and so much less stressful. And the great part about this is that as Mus has learned is that all you have to fucking do is just wait. Wait for the optimal entry. Life is so much better. Everything is easier when you just wait. If you don't wait, me and my team will come to your house and start spanking you like a little kid and be like demanding that you wait. Rasmus knows what that's like, right, Rasmus?
Yeah, just wait. That's the beauty and also the difficult thing, I guess.
Yeah, it's a pain in the ass.
But yeah, I was also wondering because on this image I sent you, how would you have placed the stop and the profit target? This is about 80 pips.
Yeah, this is
I
fine.
don't. The pips doesn't matter, but is that too small, too big, or what's your opinion on it?
No, this is perfectly fine. I think even the one that I drew was similar because the profit target was like 70 pips. So it must have been like a 70 pip stop for 70 pip target. This is fine. But yeah, as you guys know, or even if you don't know, now you know now, the amount of pips distance the stop loss is away from the entry, that does not matter. The numerical value of the pips is not important. What is important is you visually looking at the chart, setting the stop loss past the zone where it's very clear past, and it's probably not going to hit stop, but it gives you the chance to manage it if it goes against you. So you don't want the stop, for example, to be like right here above the highs. This is my horrible non-caffeinated drawing this morning. So you don't want the stop to be right there above the highs, just because if you do that, then you don't have time to manage the trade. And then price could also have a little pin past the zone and technically still be valid. If it comes down quickly and closes, you don't get to use that discretion if you do it. You also don't want to have a stop that's like, 900 pips above the zone in most cases, just because like, if price starts breaking above this zone, going all the way up here, right? That's going to be a long shot, and your profit target will have to fucking be way down here, that 1-to-1 risk reward ratio. And that would just be a huge pain in the ass as well, right? Because then your trade might take weeks or in some cases even months to play out. So we just want something that's nice in a sweet spot, not too close, not too far, something that's just right. Erasmus, where you put this here, this is basically where I would put a stop. And then your profit target is nice and cute. It's a 1-to-1. Can go up here. A trade like this could take, a couple days to play out. So I see nothing wrong with where you put your stop loss. Looks great. It's probably exactly how I would do it. Very strange that you're copying the way I would do it, man. You're copying my strategy, dude.
Oh no, way too much. Or
Yeah.
not too much. That's why it's working.
Absolutely, man.
Anyway, I was also wondering the trade you're in now, or we are in now. I thought maybe you would exit it earlier than this, and I wonder kind of like where is the zone? To me, the zone is not so clear.
Yeah, I totally understand that. The way I've constructed it for resistance was using that high over here because that's the maximum like depth we've penetrated. The maximum depth we've penetrated into the zone. Let me reword that. That's the maximum amount that price is pushed into this zone before reversing. And then the same thing right here, it went a little bit above, but then it fell back, found support, jumped up. We found support here a bunch of times before we finally broke below. And this was clearly a break of the zone, right? This is not, we can't say somehow that no, it's technically bouncing as support and this is the zone, right? Because then we're like bullshitting ourselves and playing mental gymnastics. It's pretty clear that price is for some reason bouncing around this region, because if you look at it generally, huge bounce there, break above, huge bounce here, bounce here, bounce here, then we break below and we're coming back. And the idea is that, hopefully we'll get a bounce here. The reason I haven't closed is because I don't see a reason to close quite yet. The analysis is based on the weekly, obviously. If we go down here to the daily, we got a little double top forming. I was going to be watching for a break of the highs last night to maybe get out of my maximum position. The one that's literally like a little, it's in profit right now, but it's just right up here. The third entry I called and the final entry. I was looking to maybe close out of just that one position and then get out of the other two if it starts breaking further higher, or if I see some type of candle that looks like it's going to close really bullish on the daily, like above the zone. Because ideally, we want price to just come into this region and then just start bouncing, right? A quick double top or some railroad tracks with some little candlesticks that pin away with some wicks. In this case, I don't really see anything wrong with this so far. What I will be looking at, we're on Thursday right now. I will be looking to see how the weekly candle closes. if we get another weekly candle closure deep into this zone, I'll probably close it a couple hours before market close on Friday. So maybe tomorrow morning or tomorrow afternoon if we start pushing higher. Other than that, if we stay right here and we close with indecision, I'm fine with that. What would be even better is if we close with a little bit of a more of a bearish wick on top, kind of a bear candle going down. So far this morning, at this exact moment, that's what this seems to be happening right now, but we'll have to see how it plays out. But I haven't closed this trade because I think it's still perfectly valid. And I think, especially based on the weekly time frame, I mean, it's super clear, right? At least to me. I will grant you, we've got
Yeah, at
leakage
least you.
here. We've got all the wicks. I will grant you that. So perhaps maybe the zone is something like this, right? But even in this case, right? Price is literally like the maximum region of the zone. It's from a risk structure, it's a really, I don't want to say a low risk trade because I don't know what the fuck that even means because it's all subjective. But for me, it's a trade really worth taking because it's on the weekly. To me personally, the zone is very clear. Huge bounces resistance here, multiple huge bounces of support. Finally, a break after price started making lower highs and refused to go higher. And then we just have a pullback and retest. This looks like a pretty good like break, retest, continuation style trade for me. So yeah, but if the trade's not clear to you, Rasmus, you should close the trade. And if you do close that, let
Well,
me
I
know.
did close the trade. The first entry I did close earlier. It was not so big loss, but then I entered again when you took the add-on again yesterday or when it was.
Yeah.
So since you added, I thought, okay, sure, I should listen to you and not just try to, because I don't have so much experience with it. It just compared to a lot of your other trades that I've seen, to me at least, this was less clear. But I just want to, basically hear what you just said.
Awesome, man. All of the haters will say that you're revenge trading. I will say that you're exercising your discretion. And I respect that.
Yeah, luckily it wasn't that big of a loss. So yeah.
Yeah, it was a small loss, and now you got an even better entry. So it's like win-win. No big
Exactly.
deal. Cool. All
How
right.
far into the, because now I think it's halfway to the original stop, isn't it?
No.
Or I'm
It's
actually
in
wrong.
the third position I added is in profit. The other two are in tiny drawdown, basically around the entries.
Okay, yeah.
Yeah. I'll post an update in my terminal. I'm using my phone as my camera right now, but I'll post the actual terminal in the Nick's Trades group right after this call.
Yeah. Anyway, thank you for answering.
Absolutely, man. Good questions.
Yeah, it's
I'll
in
let-
profit.
Oh,
That's
sweet.
good.
I see. This is why I have to copy your trades now, bro. I taught you how to trade. You learn to trade
Yeah.
better than
Wait
your
with that, please.
the Padawan becomes the master, and then I start bowing before you, taking trades. All
Exactly.
right. Next up, we've got my boy Maximiliano. Max, go for it, dude.
Hi, holy shit. Can't believe I'm talking to you.
What's up?
Um, I'm a longtime follower, recent joiner, first ever live Q&A, so thanks for having us. Also, shout out from Nashville. I hope your brother's doing well. And Bonnie, we see you in the back. I don't know how you listen to this shit all the time. I
Yeah,
don't know how you listen to this all day.
bro. I start
Um,
yelling at clients and bitching at people, and she's sitting there like looking at me uncomfortably, rolling her eyes, like, "Oh my god."
well, I'd be cool with that. It's just that, how many times can you say you wait for it to go deep in the zone or whatever? Anyway, I have a million questions, but I'll try to start with one and we'll be brief. Um, like I said, I'm new to paying for the service, but been following it for years and years and years and years. Back to the hedging era, I think is when I caught it first
Oh yeah,
caught you.
4 years ago.
Yeah. So right now I'm at the stage where, like, still in the paper trading zone because I can't hit even 50-50, like 50% win rate. And I've been trying to approach essentially that you preach for years, which is like you can learn all this on your own, right? Like I decided to join to see if I could short circuit after a few years of trying and never consistently hitting even 50-50. So I guess my question is like, while Rasmus was talking, great question by the way, and shout out to Prashant, good question. I saw Euro CHF, right? Which is actually pretty similar to EuroCAD. And I caught it near the top of the current 4-hour candle.
Mhm.
First of all, curious what you think, but also like, have you run across people across your thousands of clients who like, you're like, oh, choose randomly, you'll hit 50-50. And like, so far, I don't know if it's psychology at play or whatever, but like, that is not my experience. Like, my journals show like 30 to 40% win rate. Even if I tried periods where I just like, literally like random.org, right? Coin flip. And that's been, I think, the biggest stumbling block is like, I feel like I get the risk management, I get the psychology, I get the support resistance strategy, right? The like keep things simple, control risk, all that I got, just can't seem to directionally pick the right one.
Mhm. I completely understand how you feel because I used to be in the same boat. Fortunately for you, man, it is your lucky day. It is your lucky week. It is your lucky month at MissionFX because there's a really simple fix here. So before I tell you what the fix is, I'll ask you a series of questions. So the first question, what is the last four of your social security number?
It's FUCKU, I believe. Yeah.
Okay, cool. So my first question is, what is your data set so far? Like how many trades have you taken to calculate your win rate?
Uh, between 250 and 300.
Okay, so that is a large enough data set. So the second question is, are you managing, like what is your trade management? Are you letting them hit stop loss and take profit, or are you managing them early?
I am almost exclusively letting it hit stop loss and take profit. Like I think managing the losers, right, is something that I view as like uh, a skill to develop once I get a better sense of actually getting the win rate where it needs to be for this to work, right? Like I'd rather have it hit stop loss and get cleaner data than say, oh, I shouldn't have closed that early at this point.
Okay, and you're trading all Forex pairs.
Yeah, I'm trading the 28, right?
Okay, so
So
all the
nothing obscure or anything.
yeah, no like USD ZAR or any shit like that.
I have coffee before I trade. Yeah.
Thank you. That's a great, yeah, same here. Like we
Also,
gotta
can we get you a K cup or something? Like
K cups are okay. We've got one here, but like I like
it's
crap.
terrible. Yeah, it's
Yeah,
terrible.
I'm just such a snob. I'm just such a
I was just thinking that about you.
Yeah. No, it's true. Yeah, so okay, so you've got enough of a data set. You've normally I'll say you need at least like 100 to 150, and then once you get to the region of 300 to 500, that's more than enough to see the stats. The second thing I'll say is like, yeah, you got to let it hit stop loss and profit target. And if you're still not getting close to a 50-50 win rate, if your win rate's like 30-40, sorry, if your win loss rate, you're only winning 30 to 40% of trades, what I would have to do personally is I would have to go and look into the data and actually see the specifics of what the data is. Because I know, like we've modeled it time and time again with me personally, as well as a bunch of clients, that it's going to hit about half the time stop, the other half the time profit target if you're just letting it run. And you're trading quote unquote on the daily, weekly charts for this data, are you? Yeah.
Yeah, currently mostly sticking to the 4-hour. I have another question about that, but I don't want to take everyone's time.
It's okay. No, we'll spend as long as we need. We don't have to rush at all. Like,
No, I gotta get to work too. But yeah, like my question is, if we want to go to that topic, is like I think one thing I really struggle with is like I will go through like on TradingView, flip through my watch list of FX pairs and look at one time frame and be like, nope, 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 maybe, nope, 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 nope. And I've yet to break into the habit of multi-time frame analysis, right? Like start at one thing and then compare it across different time frames. So I'm curious if you have any thoughts on how to better structure your analysis. Like that's one thing you often in your videos be like, yeah, I spend like 15 minutes on the chart. There's some like version of that, but it's not really that clear like what the process is for the mechanics of I look at these pairs, like you have different lists of like, the dog shit ones. Okay, like how do you compare not just like one dimension of a single FX pair on one time frame, but one pair across multiple time frames.
Yeah, so the first thing I'll obviously do is I'll keep it real simple, right? I won't be using like 5 or 6 or 7 different time frames. I'll
Yeah.
generally just use 2. For me, it's generally just the weekly and the daily for swing trading. That's it. Every now and then I'll glance at the 1 hour, but it's really not necessary. If you took the 1 hour away from me for life and locked me in a cage with just the weekly and the daily, I'd be just fine. So it's not that much. Now, the idea behind like multi-time frame analysis, that's a fancy way of saying we're just going to zoom in a little bit and then zoom out a little bit. It's not really like, the daily, it breaks up the weekly candles into 5 candles, right? Because for every one weekly candle, you got 5 daily candles in 4x. And so there's not really a lot of like super complex nuance that goes into there. It's a way of saying, I'll look at the weekly chart, and if I see a weekly candle bouncing away from the zone, really that's all the information you need. That just takes longer, right? You have to make decisions every week instead of every day. The daily is kind of a good sweet spot because it still allows you to capture enough, let's say, enough nuance and subtleties and information from the daily chart. Because when price comes into a zone, say on the weekly chart, it's like a weekly zone. But then you go to the daily chart and you see a daily candle went into that zone, rejected it, and then left a big wick there that it painted at the zone. That's like a good sign. Okay, price looks like it's rejecting. And then you might be able to get an entry earlier as compared to if you waited for a weekly closure away, which for one would take longer. It would take maybe a week or two to see that. And then on top of that, your entries might be already gone at that point because maybe by that time it rejects, it's outside the zone. So the weekly and the daily context, and even if you're using like 1 hour and 15 minute, the same shit applies, right? You're basically, it's just zooming in the chart and breaking up that one candle into a couple more candles by going down a time frame. But there's not a lot of complicated dynamics that goes into it. It's not like I'm like looking for something specific on the weekly and then I'm going to the daily and looking for a candlestick pattern. It's just kind of contextualizing everything and making sure that if my idea is that I think it'll bounce that support on the weekly, well, when I go to the daily, I'm gonna want to see a daily candle kind of start moving away from the zone and not break it. It's very simple stuff like that. Does that kind of make sense?
Yeah, so I think if I were going to parrot that back to you, it's not like every pair look at multiple time frames. It is identify on some higher time frame, the where you think is a likely area, and then you can zoom in to make sure you're getting the entry you want. Is that summing it up?
Basically, yeah.
Okay, cool. I just want to make sure I got it.
Cool.
I could keep going, but I want to make room for everyone else.
It's okay, bro. None of these other motherfuckers even have any questions. Look at them. They're all sitting there staring at us and they have no hands raised and they're just listening to you.
I love that. Love that I get to be this vulnerable and it's going to be on YouTube forever. Fantastic.
Okay,
All right. So what do you see on Euro CHF? I'm looking at the 4 hour and caught it just about the top of the current candle's wick, but kind of similar to what you were talking about EuroCAD. Just curious what you think.
Absolutely. Well, I have that chart pulled up. We'll look at that in 1 second. I want to go back and like highlight your win rate situation because it's very interesting that it's significantly below 50%. What I'm gonna have you do is, oh shit, my camera's fucked up. Hold on. Okay, I'll just keep talking because you can hear me. But what I will have you do is I will have you are you tracking your data in a spreadsheet or how are you doing it? Spreadsheet. Okay, perfect.
Spreadsheet.
Okay.
Yeah. And I've already had AI look at it, right? Like the obvious answer in today's world is like, okay, we'll throw a CSV at Claude or whatever, and it's like, yeah, you're missing, you're not picking the right direction, right? Or rather, you're picking bounces that aren't bounces.
Yeah, that's interesting. I would like to look at a couple trades off that spreadsheet. So if you're able to kind of make it public and send me a link or just send me the actual CSV file or whatever file you want, me and my team both will be more than happy to look at it. And then because I'm interested as to like how that's happening because I haven't really seen that happen before over a long enough trade horizon. It averages out to about 50 with just random entries buying and selling at basically anywhere. So I'd like to look at it to actually see what's going on there. Yeah, and then I can give you more insight there. So we'll touch that, and then I just wanted to address that. So now
Roger that.
We'll look at US.
Yeah. Hey, Nick, before we move on to the next topic, I was facing the same issue what Max was facing previously. But let me quickly give you the solution that I have found for myself and my psychology. Can you please open the Excel sheet that I have sent you on Discord? So basically, it always, most of the times, it comes down to the position size for me. And there are 8 different types of position size models that are available in the market mathematically. Optical F, Cayley criteria, fixed size, fixed position size, etc. There are various types of stuff. So this is what I have found that is working perfectly for me right now. Because I was also not getting 50-50 risk reward ratio. Sorry, yeah, 50-50 risk reward ratio. So I have applied the next strategy. These are all parameters that you can see. Those are available in Nix system at the moment. I have started using the Kelly criteria, that is half Kelly compared to that. And if you go to the second tab, Nick, th uh, that's a Monte Carlo simulation of 100 trades for Kelly criteria that has executed on this. I have ran it for 1,000 trades and I have modified, I have played it with multiple criteria, etc. This is just a snapshot of 100 trades. But I have ran it for 8 different models. I have run it huge amount of data and I have done all the analysis for over a month in last a few months. And what I have found out that Kelly criteria is a perfect position size that matches with me. Means whenever the drawdown occurs, my position size gets degraded. I don't mind reducing my position size in a drawdown, but when we get winning streak, my position size automatically increases with the Kelly criteria, and that's where I can make more money based on that.
Yeah, so it's
So
basically
yeah.
yeah, it's basically a percentage risk model. Go ahead.
Correct. Yeah. So that psychologically helped me in achieving close to 50-50% risk reward on that one. Previously, I used to face this problem. So I don't know where exactly the fix is, but fixing position size, the model of position size that helped me a lot in my trading.
Okay, perfect. Yeah, I'm going to look at Max's data as well, and I'd like to, because I want to delve into it and see, because every model that I've ran, it pans out to about 50-50. You just can't predict which way it's going to go. I'll also say that even in the midst of the fact of the win rate being below 50%, that doesn't even matter, because if you're still making more on your winners and you're losing on your losers, your win rate can be 30-40%. You're still making money, right? Maybe less than you'd be making if with a 50% win rate, but it's still a profitable approach long term, as you've seen right there in your Kelly criterion with your actual growth chart. We know the system works in back testing. We know we can model it in real time and it works. We know it works in forward testing in a live market environment. Like statistically and mathematically, we know it works. But yeah, the 50% win rate thing is throwing me off because I'm like, no, it should be 50. So I want to see the actual trades and see what's going on there. But thank you for sharing, Prashant. I'm happy it's working for you. You've been making money hand
Thank
over
you.
the last few months, and that's great.
Thanks.
Yeah. All right, Max, we will look at that USD CHF chart, and then we can usher you off to work while we sit here missing you the whole time. Let's go here to all right, USD
Also,
CHF. Yeah, go ahead.
Prashant, happy to chat about all that cool stuff you just said. I don't want to take up this time, but
Sure.
I don't know how I'll catch up with you, but I'll figure it out.
Sure. Okay, no problem. Thanks.
Sorry, Nick.
All good. I might link you guys both up in Discord if you want, and then you can chat. Because Prashant went through the same shit. I remember he was bitching to me before. He's like, I don't know why my win rate is not 50%, Nick. And I was like, holy fuck. And so, but we worked it out. We got it all fixed. So good shit.
So you're saying I'm bitching to you?
Yeah, dude. And you see, I'm bitching to you as well, because I'm like, I don't know how. How is it below 50? That doesn't make sense. Okay, so USD CH or sorry, Euro CHF.
Euro CHF on the 4 hours, what I got on this call, in fact.
Okay, so you're just I see what's okay, I see what's going on. There's nothing wrong with using zones here on the 4 hour, but they're a little bit less reliable when compared to looking at the charts from like a higher time frame, like weekly and daily, right? Because when you go to the 4 hour, generally it's going to be a lot more zoomed in, and you'll still get price bounce at zones like that, of course, but there's more volatility, there's more liquidity spikes where price just kind of sweeps through a zone back and forth. And it's yes, a little bit harder, but just based in isolation on the 4 hour, this is technically a trade that's perfectly fine because it's technically a zone. You're technically selling at resistance, and that's technically correct. The
bet's kind of correct.
Yeah, it's kind of sort of hypothetically, figuratively speaking, correct. Yeah. The one thing I'll point out here is, and this is all discretion, right? This is complete pure discretion. This doesn't apply to 50% win rate because you just, with that, it's just basically entering wherever and just letting the stats play out. My discretion says like, okay, look, we've been going up for a while on an uptrend. We had a nice sell off here, yeah. But when we came back up here into this zone, we're continuing to make some higher highs and higher lows, and we're not breaking downwards. And now we're up in this zone again. just given the totality of the circumstances, this looks like something that's just going to continue up eventually. So I probably wouldn't be selling here. However, I will grant you and everyone else who's not currently profitable yet that this is just discretion and it's just intuition based on experience. It has nothing to do with the fact that it's technically still a perfectly fine trade to take. And if you do the risk structure appropriately and manage everything right, then it's still going to be profitable. However, you can gain more of an edge by using your discretion in trading. So yes, while this is technically fine, it's technically fine to enter. You know, if it breaks above, try to get out early. If it goes into profit, hold the profit target. I will say that given the fact that we've already bounced here, and then we've come back up and we've kept making these higher lows and pushing deep into the zone and refusing to break lower, this looks like it's eventually going to get broken here pretty soon, in my opinion. So I probably wouldn't be selling at the resistance zone, even though it's a pretty clear resistance zone and perfectly fine.
Makes sense. Thank you. Thanks for all the time.
Yeah, absolutely, man. It was really cool meeting you. I'm happy you're here. All right. Next up, we will go to Mr. Jackie Khan. Mr. I hope I got that right.
Hi, Nick.
What's up, brother?
Good, good. I sent you a Discord message,
Mhm.
and I just have a quick question on like just like the overall how to be completely like all in on trading.
Mhm.
So this year was my first year being profitable.
Yeah.
And I've been following you for around like 5 years. And this year was the first year where I saw some result in like growing one of my accounts.
Mhm.
And I noticed that when I have like win streaks, they last around 3 to 4 months. But always when I start getting confident, I end up taking like one or two trades that wipe out 1 month of that progress.
Yeah.
And then my confidence just drops again. And then I'm like, oh, maybe I should just continue my side work.
Yeah.
And then but I can never like full on push and just like completely go all in on trading. And I always end up like, oh, maybe I should do drop shipping on the side or this on the side, sell a course. And like it's just like
Yeah.
I don't know if you know what I mean.
Mhm. Okay, so we'll look at the facts and then we'll look at the feelings because both of them matter. We can't just discount either one of those things. Okay, so the facts are over the course of the past, it's been a year, right? It's been a year since you've been on this account, or has it been 6 months or what? I'm not hearing any audio.
Hi, do you hear me at the moment?
There you are. Okay, go for it. How long has it
Sorry. It's been around 6 months on this account.
been? Okay, so half a year. So the
Yeah.
facts are you've taken a $24,000 account, you've grown it 60,000, and then you just got your original investment back out of the account. You just withdrew it. Even in the midst of swaps and fees and commissions and shit. Because bro, I get eaten alive with swaps and commissions. You've seen mine, it's like 220,000 right now. So
Yeah.
even after all that, the fact of the matter is you have been profitable for 6 months. Now, is this luck? Should you have imposter syndrome? Should you be worried the next 6 months you're going to give it all back and then more? All of
Yeah.
those could happen, right? It could happen. However, what we generally see is if someone's been profitable for a period of 6 to 12 months, and especially has great returns like you, like growing 20K to 80K, and then taking out your 24K, like that's great, right? That's kind of like, I've roughly tripled the account over the course of 10 months. You've roughly done that in about 6 months, right? So it's like, it's really good. Your risk is probably a little bit higher, and that's perfectly okay if it's your risk tolerance. That's great. But you're having this thing called the Dunning-Kruger effect. Are you familiar with this? Jack.
No, I'm not familiar with it.
Okay, cool. So you're having this thing, the Dunning-Kruger effect is basically where intelligent people underestimate their abilities, and then stupid fucking retarded people overestimate their abilities and they think they're smarter than they actually are. So I will point out that it is a very good sign that even though you're doing good and all the facts point that, yeah, you took a $24,000 account to 80K, you took out your original investment, now you still got 60K to trade with in the account. Bravo, man. That's fucking good. Most people will never be able to get profitable doing that, right? It's in the low single digit percentages like 5% or less. But those are the facts, right? Now, what you're looking at is you're saying like, this isn't good enough. I don't know. Like, what if this is luck? What if I lose it? I'm going to have a 1 month period where I give the previous month's profits back. It's not going to work out. This is it's like a mental like thought dialogue where the story you're telling yourself is you're underestimating your ability, even though the facts point out something different. Now, the only cure for this that I've found personally is just acceptance. It's just saying like, look, maybe I actually suck at trading. Maybe I should actually go do drop shipping or go drive Uber Eats or something, or just like sell a course or whatever. Maybe I should just not trade because this is all luck and I should just stop here and consider it just gambling. I had those same thought patterns and stuff like imposter syndrome for like 4 fucking years after I started trading, like from 2016 until about maybe mid 2020, until I finally took a deep breath and said, I think I'm profitable. So let's see what happens. Acceptance is the only antidote for your feelings at this point, because your actual results in reality, that's fine. The statistics suggest that 6 to 12 months of continual profitability on the same account, and even like a withdrawal, getting your original deposit back, that indicates you're likely to have continued profits long term. I would keep the risk low, so at the same or lower than what you're currently doing, especially whenever you feel you're having months where you're just doing shitty for no fucking reason. You feel the whole vibe is off. Maybe risk a little less than you normally would, just to make sure that it's like your risk tolerance fits with what you're feeling and what your intuition is telling you. It's perfectly fine to use feelings in trading. The stupid motherfuckers who don't know how to trade will say that, oh, you're using emotions. And it's like, everybody uses fucking emotions when you're looking at a chart. You're using your feelings and sensations of what the chart looks like to be able to decide what to do and how much to risk and how to manage the trade and everything like that. So it's perfectly fine for you to lower your risk on those times where you feel like, okay, I'm getting overconfident and I feel like I'm going on a losing streak. I feel more comfortable just lowering my risk. It's okay. Some people will call you a bitch. I will call you exercising your intuition. It's perfectly fine. But the antidote to you for getting out of this like mental rumination thought pattern of being an intelligent person who is underestimating their ability is to just accept that, maybe it's actually the case that I suck at trading. Maybe it's actually the case I'm going to lose all the money I made. I'm going to blow this 60K account. I'm going to be left with my original starting balance. And a year from now, from when I started this account, right? 6 months so far, but after 12 months, maybe I'll end up with nothing and I'll be break even. And then I'll just go do a drop shipping or something. You just have to accept that the worst case scenario can happen. Sometimes it does. In your case, I'd consider it a very low percentage chance of happening, but it still could happen. And we can't just pretend like that's not the case. That acceptance is the only antidote I've ever found to any type of anxiety, rumination, panic, imposter syndrome, doubts about yourself, lack of confidence, and then overconfidence, which is just as bad. The only way I've found to go about that and managing those emotions and feelings is just to accept and say, look, I will take it on the chin. If I fuck this up and it's horrible and I end up like just sucking at trading and my life and my career as a trader amounts to nothing, I accept it. I will be man enough, and if you're a female, I will be woman enough to just accept it and say, look, that life sucks. This is it. This is what happened. And I will still figure it out and I'll go through life the best that I can. Because at the end of the day, we can only do the best we can. Each of us has different capabilities and capacities, and we all learn at different rates, and it's all okay. But radical extreme acceptance is your only antidote to solving the feelings part. As far as the statistics part, I'd say you're doing fine. I mean, obviously, bravo. We're probably having people on this call thinking like, holy shit, this motherfucker grew a 20K account to 80K. That's pretty insane. And you're over here like being worried, like, Nick, I don't think I'm doing good, man. I think I'm so anyway, I've told you all this bullshit. What do you think? What are your thoughts?
Yeah, I think I agree. It's like the self-doubt that I can do what you do. Not at that scale, but just like go full on, drop everything else and just go deep into Forex. And not like continuously, oh, I gotta do this too. I gotta do this on the side too. I'm just not gonna be able to do this in the future. Or like it's all luck. It's all true. But in the end, it's like it doesn't benefit having that mentality.
Yeah, I mean, it's better to have that mentality though than to be overconfident, because I've had people like one of my clients, I feel so bad for him. He had a very nice investment banking job at Barclays in the United Kingdom. He had started having success trading like when he was one of my clients a couple of years ago. And then he told me he was quitting his job, and me and my team and a bunch of my other clients told him, like, bro, no, you don't have to quit your job. Just you have a really good income, you've got a slick job. We know you hate it, but like, fuck, like just do it for another year or two to make sure that you're actually profitable trading. Because he'd only been profitable for like 4 or 5 months. And I felt
Yeah.
so bad for him. I love he's one of my friends. He's really cool. But I felt so bad for him because when he quit his job, right, and gave away his like 15, 20-year career and his income to do trading, and then he had like a couple months of like a rough patch. I think it was only like a 2 month rough patch. He started getting like shitty and doubting himself. He had to go back to work at Barclays, but he was in like a lower position, and someone that reported to him was now his manager, and now he was reporting to them. It was this whole mental psychological fuck up. So I'm telling you all this so that you and everyone else on this call can hear, to say, even if you're doing good trading, I would not quit my job until you've been profitable and made like significantly more than your income from your job for like about like at least a year, if not realistically, maybe like 2 years or more. Because at that point, you know, like, okay, I've got a nice little cash insulation barrier. You've made plenty of money trading. Because if you've made, you know, 3 times or more what you're making at your job over the course of a yearly basis, you know, then it's perfectly fine. If you're normally making 50K a year, but then trading, you've made like 150K a year for 2 years on average, you've got a little bit of insulation. And if things fuck up in trading, you just go back and get a job, right? And you got plenty of time to sort everything out. But I wouldn't walk away from any of your jobs or side hustles at the moment for 2 reasons. Number one, it's extra income. And then that extra income gives you confidence. You can pay your bills. You don't have to worry about like removing money from your trading account, chipping away at capital. But number two, there is a sense of security and peace that when you trade from that area mentally, instead of trading from like a, oh shit, this has to work mentality, and like if I lose money for the next 3 months in a row, then I'm not going to have money to pay bills. There is a sense like it gives you kind of like balls to be able to just trade normally and be relaxed because you know you've got money coming in. Also, bro, trading doesn't take that long, as you've seen. Like maybe some people think I'm literally bullshitting and talking nonsense when I say about 30 minutes a day is all you need. But like when you're looking at weekly and daily charts, they don't really change much day to day, week to week, right? It's a couple candles a week. 15 minutes in the morning is almost too much. What the fuck are you doing for 15 minutes? There's barely 30 pairs. You're looking at each pair for 2 minutes, even when you know there's no setup and you're clicking through. But even if we just say 15 minutes in the morning, 15 minutes in the evening, that's only 30 minutes to an hour a day, Jackie, that's allocated to trading. You can spend the rest of that time like, you know, exercising, personal development, having jobs or having side hustles that you can keep using to make money. There's nothing wrong with keeping an income going while you're trading profitably. It compounds your confidence, it'll compound your trading account, and your spouse will respect you more, Jackie. What do you think?
That's great advice. Thank you, Nick.
Okay, perfect. Anything else, brother?
Nick,
That's all. Thank you so much.
Okay.
Jackie, before you go, Nick, sorry, my 2 cents. When I lost entire 1 month of profit in one trade, the issue is almost always the position size. So
Yeah,
psychology plus position size, that fixed at least my issue. Thanks.
yeah, that is true too. I did up my position size each time I lost that much.
I'm
That's
gonna
it.
jump in because I gotta go and want to say thanks, but also Jackie. I'm reading a book called Quit by Annie Duke, which she's like a professional poker player turned, I don't know, self-help or whatever. But like poker players think of it as they call it one long game, which is like any given win streak or losing streak isn't actually the point. Like you're playing one long continuous game, right? So like that's how I'm thinking about it is like individual hands or individual, trades don't matter. What matters is a year, 10 years of this. So hope that helps. If you check out the book, it's called Quit. It's worth reading, I think. Sorry for jumping in, but thought that would help.
Yeah, thank you guys.
Yeah. And then also to sum up what Prashant said, Jackie, Prashant basically told you that size matters, bro. You gonna let him? You gonna let Prashant treat you like that, bro?
It does.
Good shit. All right. Great question.
Jackie, can I just ask you out of curiosity? Like, what are your position sizes in general?
I risk about 10 to 20% of the account per trade.
Yeah.
Yeah.
So that would be if Nick, or do you follow Nick's, or do you trade by yourself completely?
I just trade by myself completely. but I just wanted to join in like with Nick's group because I just see the way he manages his losses, and like he does not care one bit when he's down like hundreds of thousands of dollars, or when he's losing like months and months in a row. He just like he just knows his statistic and just trades and does not care one bit. And that I think that's what separates me from also like the confidence part is like he doesn't care if he loses because he knows his statistic. That's it.
But usually do you usually stop out earlier than the 1-to-1, or how do you do it?
It depends. Sometimes when like there's like a big fake out in a wick, I just like hold it when it gets closed into the zone again. But besides that, it's usually just a 1-to-1.
Yeah. So when you say 10 to 20%, are you consistent with that every trade you take, or is it depending on the quality of
Yeah,
the
it's
setup?
mainly pretty consistent.
Yeah. Okay, thank you. I was just wondering.
Yeah, thank you.
Congratulations, by the way, you're doing really well.
Thank you so much.
It's like double your account in 6 months. It's not many traders can do that.
Did you say
Or
double?
even being profitable is good, but like double it in 6 months is crazy.
Rasmus, dude, Jackie, he's insulting you. You gonna let him? He 4x'd it. Well, almost. He almost quadrupled it. He grew it from 24K to 80K. Then he took out his
Really?
then he took out his original deposit and it was left with 60K in the account.
Oh my God.
Yeah, his
In
deposit.
6 months?
Yeah, about 6 months, yeah. Yeah, almost 25K. Profited 60K, so the account was up to like 80 something thousand, 87, 86,000 after the fees and commissions. Then he took out.
Yeah, so he's risking quite much more than you as well, Nick.
But I also lost for 6 years before too.
Yeah.
That's wild.
Do you sometimes feel that you risk too much, or are you okay with risking this percentage?
Yeah, it's about okay at the moment.
Congrats, it's amazing.
Thank
You're
you so
doing
much,
really well.
guys.
Just continue what you're doing.
Dude, bro, he insulted you again, Jackie. Rasmus is trying to tell you what to do, bro. He's like, continue doing what you're doing. And you're like, I'm gonna do whatever the fuck I want.
Don't listen to me. I'm just I just started trading.
Damn, Jackie's getting the most shade thrown at him. Prashant was basically saying, yo, size matters, Jackie. And Jackie's like, what the fuck, bro? Rasmus is like, you should keep doing what you're doing. You're like, don't tell me what to do, bro.
No, I really appreciate you guys having input.
I think you should just take over the call, like Nick. He can just go and hike, and like we were talking about earlier. Just leave. Just kidding.
Yeah. Good shit, guys. Good shit.
So yeah, I want you to all know that my wife's boyfriend thinks size matters as well. So it's just how it is.
Yeah, I've never. I wonder if size matters to my wife. I've probably asked her at some point. Hey, baby, do you think size matters?
What we're talking about.
She said it depends what we're talking about, as if she doesn't know what we're talking about. So I'll leave it at there before I get my skills matter more than size. You hear that, Prashant? Skills matter more than size, bro. I can use some huge position sizing on Euro USD if I got good skill. All right, Euro USD is continuing to go down. Oof, I hope we get a nice move into profit today. Okay, well, that said, I don't see anyone else's hands raised, so we'll wait here for a second. If you have a question or you want to talk to me about something, unmute your microphone and let's chat. I'll wait here for a second.
Hello?
Odd, go for it, man.
Hey, can you hear me?
I can hear you.
Perfect. Just a quick one as well. I'm fairly new to this as well, but I just wanted to get your thoughts on. I know you recently with the Euro USD you did add to the position, but do you sort of believe in adding to winning positions, or do you just sort of let it play out as is?
I do believe in adding to winning positions, but I believe in adding to positions when the context suggests that the likelihood of the trading opportunity resulting in a profit is higher. And that can be if a trade is in profit, and it can also be if it's in drawdown. Now, since I trade, I mean, some people might call it reversals, right? Because I'm wait for it to get into a zone, then I'm betting that it's going to bounce and go the other way. Since that's the case, it's generally more optimal, like, 3 out of 4 times or 3 out of 4 trades that I'm adding to for me to add in drawdown. So it's like, okay, it goes into a zone, it's worth taking, I'll take it now, but I won't use my full risk allocation. I'll use 50K instead of like 100K. And then I kind of had a plan to say, okay, if it goes a little deeper where it's a really optimal entry, I'll then add another 50K of risk right there, knowing that if it bounces immediately, the profit could be in excess of 100 grand, right? Because if I got a better entry and I'm still risking 50, the profit goes from like I'm risking 100 grand total to maybe making $120,000 of profit. Sure. I thought that was.
Yeah,
Sorry,
gotcha. So you sort of believe in like, I kind of want to say like the opposite, where you add to like a losing position almost. I guess say losing, but I guess that's like an open-ended opinion.
Yes, I add to a position that is in loss, provided the context is still good, right? The context is everything. I'll give you this case right here with Euro USD, right? My first layer of positions were like right here, and then it went deeper into the zone, and then I added again up here, like a little bit above where current market price is at. That's just basically saying like, look, we got an entry at a good spot in the zone, but then when it went to an even better spot, we got an even better entry. This is different from something like this, which is basically like DCA trading. And I used to do this and it works with small enough position size, which is kind of crazy because it takes no skill. But it's like where it goes down and you start a position and then you're like, okay, that's going into profit, but then it goes down even more. And you're like, okay, I'll just add here. And then, it keeps going down even more. And you're like, okay, well, I'll just add here, but there's no plan, right? There's no max loss. There's no stop loss. There's no sort of management plan to say, hey, once it gets past, here, then I'm just going to exit the trades and I'm going to take the loss and move on. That is different. That is the case where you're just adding to a loss recklessly if you're using too high position sizing. Now, if you're on a $100,000 account and you're doing this on Euro USD with 0.1 lot sizes, it's not that big of a deal, right? In most cases, eventually you're going to bounce back to the position average and you get out in profit. I did that and that worked successfully. It's just you have to use really low position sizes to make it work, and it doesn't take a lot of skill. With the way I'm trading with risking high position sizes and having set stops at the maximum risk allocation, you can add in drawdown, but it kind of has to be pre-planned. Like if I were to enter my first position at full risk right there and it went against me, I wouldn't be able to add, right? So it has to be something you think about beforehand. Generally speaking, if I were to say I enter up here and then price starts going down into profit, and then I'm adding down here, like as it starts going into profit, and let's see the final profit target is maybe like some of the lows down here, something like this, maybe like this. If I'm adding here, I'm now bringing my position average from up there to like right here in between. So my position average is right there. What happens if I add here in profit, then it goes against me? Now I'm losing profit from my profitable position first, and my second position is actually going into drawdown. So instead of being in profit, I'm now at like break even. And then if it goes up against me just back to my first entry, now I'm having a situation where I've lost, maybe a third of a stop loss from this position I added, a third or half the stop loss, and my first position's at break even, so I'm sitting in a net loss. So generally speaking, adding in profit is a little riskier unless you're adjusting your stops a little bit closer, because then you can sort of maintain the same risk structure and not increase the risk by adding into profit. But like I said, at least for the way I'm trading, since it's mostly reversals and not continuations, it works better if I add when a trade is in drawdown, but provided that drawdown or loss is not like, it's not like just continuing the cascade against me. It's just, oh, we just popped a little bit further into the zone. So I'll just add here and I still have a plan to get out if it goes above the zone. So yeah.
Gotcha. So adding when context is correct.
Correct. Adding under the right circumstances and given the right context is the best way to do it. A lot of that's going to come with discretion, as you know, right? Which you get from just following my trades and seeing all my past trade history and how I manage things. So yes, it's certainly a skill set. It's not something that's just like mechanical and black and white. And then also just to highlight this again, like 3 out of every 4 trades I add to, it's generally adding in drawdown. It's not adding a trade in profit. Sometimes I will do that, and that's okay. But it's generally when a trade's going slightly against me, it's adding in a managed drawdown, and it was generally pre-planned with the risk because I started the first position with a smaller position size.
Okay, perfect. That makes sense. Thank you.
No problem. Cheers, mate. All right. Any other questions? Anything else you guys want to chat about? We've been going for, holy shit, almost 2.5 hours, and it feels like we just started. Oh, no, sorry. It's 9:17 on my, oh yeah, it's 8 a.m. here. Oh, we've been going for almost an hour and a half. Sorry, guys. My computer is still in Central Standard Time, but I'm in Mountain Time here in Colorado. I'm really fucked up and I haven't finished my coffee, so please forgive me. Any other questions? Anything else y'all want to chat about before we hop off?
Sorry, actually, just to add to my previous question, with the Euro USD, is this something that you'll think will play out in about 1 to 2 weeks, or how long do you think the time frame would be for this trade?
It's already been about a week since we entered. So I mean, this is a trade that's been 5 trading days. This is either going to go into drawdown or profit probably here within the next 5 trading days. So probably like next week on Thursday, we'll probably be out of this trade either at a loss or in profit. Yeah. So yeah, some of them take a week or two. Most of them don't. Some of them do. Is that fair? Is that fair, Parth?
Yeah, that makes sense. Thank you.
You're just shaking your head in disbelief, like
Where-
it can't be, mate. It has to take a week or less. Why are we waiting 2 weeks for a damn trade? All right. Randall, go for it.
Yes, not as much of a question as kind of a suggestion that's worked for me in my trading. When as far as sizing trades, it's been really, really simple. If I take my balance, divide it by your balance, and then I just will use that percentage to multiply that times, I'd use that percentage to multiply that times your position size that you called.
Yeah, so you're basically just using a ratio to do proportionate position sizing. So that's fine. What a lot of people do, if they want to risk, like say I'm risking 50K on a trade, if they want to risk like 10% of that, which is kind of what like Prashant's doing, he's risking like 5 to 10K or 5 to 7.5 grand per trade. You can just use like 1/10 or 1/20th or whatever of my position size. So basically, if you're knowing like, okay, Nick's trading and he's has this much in his account and he's risking this much per trade on average, you can just basically divide whatever my total position sizing is. You can divide it by whatever factorial or whatever number you want to get it to what it should be for yours. So if you want to risk like 1/20th of what I'm risking, and I'm risking 20 grand on a trade, but you only want to risk 1 grand on the trade, you just divide my total position size by 20, and that will give you the total position size you should use. So yeah, but you're basically just using like a ratio to figure out proportionate position sizing. That way, the kind of growth percentages, the fluctuations of your account would kind of match what mine is.
Yeah, so end up with like 3K risk if you're risking 50 and about 6K if you're risking 100.
Exactly. Yeah. Unless it's your USD. Now you're risking probably 7K on that if you did the same sizing.
Exactly.
Yeah. Good shit. Yeah. Good stuff, man. You should be, if you're doing it that way, you should be able to come out on top like 5 to 10K a month.
For me, it would simplify it quite a bit because as soon as I see your screenshot here with your position size, I just multiply it times 0.06 and I know exactly what size to take in terms of lots.
That's perfect. Yeah. So you're just risking 6% of what I'm risking, which is great. I mean, that's fucking awesome.
Yeah. Thank you.
Yeah, no problem. Thanks for your input. All right. Any other questions or anyone else we want to chat with? All right. Well, since that's everything, everybody else is a millionaire trader already. Nobody has any questions. We'll go ahead and hop off. This was a great live session, y'all. The once the uploading is processed and all that shit, I will upload it to YouTube so you guys can watch the recording. And those of you watching the recording who couldn't participate, you're welcome. You're welcome. We recorded it. My clients reminded me to record this session just for you, so you better thank them. Anyway, thank you guys so much for joining and being a part of this. I had a lot of fun, as always. I hope it was valuable for you guys, and I will see you guys in the next session.
Thank you, Nick.
You're welcome. Thank
Cheers,
you.
buddy. Thank you.
Cheers, man.
Thank you
Cheers.
so much.
Peace. You're
Have a great
welcome.
day.
Cheers, Rasmus.
Thank you.
You're welcome, man.